Yo, everybody, back at it like a crack addict. It's your boy, official Tyree Samuels. And once again, what we're going to be talking about today is we're going to be going over yet another profitable, successful trade idea that, of course, you had the ability to take advantage of. Did you? Did you not? Well, I guarantee you won't be moving forward, especially after you watch this video. So make sure y'all stay tuned for the next clip. I'll see you soon. Peace. Yo, everybody, back at it once again. Favorite entrepreneur, your boy, official Tyree Samuels, right? Now, before y'all go any further, do not be shy. Go ahead and hit that subscribe button because you guys know every single day I'm dropping a video. And if you're not hitting the subscribe button, I don't know how you're going to get the notification that I just dropped a new video. Right underneath the subscribe button, you're going to see the like, the thumbs up, and then the section to be able to leave a comment. Go ahead and tap into that. Now, without any further ado, okay? As I said, I've been doing a pretty bad job of doing the videos. Like, this is a setup that was sent out like December 30th. We are like in the January 23rd today, the day that I'm recording the video. So I just want you guys to know I'm gonna start doing a better job. I mean, I'm still dropping the videos every day, but I need to start getting the videos of these setups out a lot faster than like it taking an entire month. Okay. Now, with that being said, you guys saw in the thumbnail, we're going to be going over a long opportunity for Euro USD. So what I want to be able to do is go ahead and take that replay tool, hit them with a bottom boom, bada bing, right? And we're about to go ahead and get into the nitty gritty. Okay, so as you guys know, I love to be able to, actually, I didn't take it back far enough. Give me 1 second, right? So as you guys know, I like to be able to use the replay tool, which if you guys have no idea how to use the replay tool, definitely go ahead and look in the top right-hand corner. And I'm actually going to have a video showing you guys exactly how to use the replay tool, right? So first and foremost, I like to be able to, analyze the market on a 1 hour time frame. So whenever I'm analyzing the market on a 1 hour time frame, two primary things I'm looking for. I want to be able to look for the overall trend of the market. And then from seeing what the trend is, I'm going to base my bias. My bias basically meaning what direction am I going to trade in. So just because it's an uptrend doesn't mean I'm going to take a buy. Just because it's a downtrend doesn't mean I'm going to take a sell. Okay. And this is actually going to be one of those examples. So if you guys actually notice, right, this market is obviously in a downtrend. So let's actually look at this, right? So the market extends down, okay, gives a correction, extends down, right? And in a sense, you could be looking for the market to once again give some sort of retracement or correction within to this fib zone that I have drawn out. But before I move too fast, you guys can clearly see the market is dropping very aggressively. Okay. Once the market dropped aggressively, what do? We broke some level of previous structure, right? The market ended up retesting, okay, back to that previous level of structure that you guys can see, okay, right? Before it continued to drop again. And then once again, what did the market do? It broke another level of structure and it is still dropping. So what could possibly happen? Yeah, maybe the market does, give some sort of retracement back into maybe the 78 fib level, which is the previous structure, before it continues dropping again. But we're not going to get so far ahead. So now that we understand the obvious direction as far as the trend of the market, now I need to form my bias. Okay. So what I really want to focus on is this accumulation that we see happening basically from this area. So this was the last high. Okay. And then this is going to be the last low. So we can actually look at these two areas right here. So this was the last relative high. Okay. Technically, you could say that, but in the sense of, the market forming some level of structure, this is going to be that last relative low. So within this range, okay, is two things. One of two things can happen, right? So within this range, one of two things can happen. Okay. So what I want you to be able to understand is it's two kind of traders. It's the traders that trade within the sideways moving market, and it's the traders that wait for the sideways moving market to start aggressively going back in the designated direction. Okay. So what you could do is, if you don't want to trade within the consolidation or the sideways movement, you can wait for the market to either break out to the upside, give some form of retracement, and then give a continuation. Okay. Obviously, you could technically do the same thing on the downside, wait for it to break out. Okay. Give some sort of retracement, and then look to take a continuation. Right. So both of these are examples of the safe way. Okay. This is what a lot more people would feel comfortable doing. So you're like, okay, I don't like trading consolidation, which is not a bad thing. I'm gonna be honest with you. Trading the trend is going to be the safest thing to do. Trading in the sideways moving market, which is also considered consolidation, is definitely one of the more dangerous ways to trade. Doesn't mean either way is wrong. Doesn't mean either way is right. It just means you need to know what you feel comfortable doing and what the data based off of your previous history is showing that you're more successful at, right? Me personally, I can do both dynamics. I can trade sideways. I can trade in a trending market. It doesn't really make me a difference, but I want to be aware of what I'm actually doing. Okay. So now we've confirmed the overall trend of the market. Now we're looking at the movement of the market. So now I want to be able to form my bias. So obviously, as you guys saw from the thumbnail, let me just go ahead and backtrack. Obviously, as you guys saw from the thumbnail, this was a long opportunity, which means I was looking for a buy. So remember, I confirmed that this is a downtrend, but I'm actually taking a trade against the trend. So let's actually look into the reasons why I did that. So first and foremost, what I noticed was the market ended up forming this low. Okay. Keep in mind, this low did not come back and get broken. At that same time, the market gave a very impulsive move to the upside, which actually did what? It broke a previous level of structure, which was a previous high. So this could be the first instance in this entire drop to where I'm now seeing the market created a floor, right? The market moved up, broke a previous high. What did it do after it broke that high? Gave some sort of retracement, okay? And obviously, it's still kind of ranging, but the concept of it is it gave a retracement and the reaction, the market is still moving up. Now, the thing that I'm actually paying attention to more so is going to be this break of structure. So since the market now broke this structure to the upside, as long as we don't come back down here and violate this low, I'm going to be looking for the market to continue moving up and break outside of this range. Okay. So with that information, now what I want to be able to do is I want to start looking for opportunity to maybe continue taking the market to the upside. Where did that opportunity come? Right here, where you guys see this initial impulsive move. So notice, right? What I want you guys to notice is the market is always going to be doing the same thing. Okay. So if I were to actually take a Fibonacci, okay, and start from the low, right, to this relative high, you guys can see that the market ended up pulling back right into this fib zone, okay, the 61.8 to the 88.6. And that's where we actually got the reaction for the market to do what? Once again, break this previous level of structure, right? Which now we will be looking for what? Some sort of retracement, okay, to get some sort of continuation, right? So the next thing I want to be able to pay attention on is all of these things are showing us that the market wants to continue moving higher. Once again, what do we get? We got another level of structure break over here, right? So the market continues moving higher. And now you guys can see it is also forming what? Higher lows, right? This low is higher than this low, right? This low is higher than this low, right? And this low is higher than this low. So literally what we're seeing the market doing is the market is literally showing us a multitude of confirmations. Hey, Tyree, I want to keep moving up. Okay. So you're either going to go with me or you just go watch me leave without you. Okay. So now, since I already verified we got the structure break, right? We had the fib retracement back into this imbalance, right? This little imbalance zone up in here based off this time frame on a 1 hour. Everything is making a lot of sense. So now that I got this impulsive move that amounted to about 94 pips, right? What I'm looking for is within this impulsive move, I want to see if I have any of my other confirmations that I normally look for, which I usually get on the RSI. Okay. So two things I look for on the RSI are going to be divergence and exhaustion. So the one thing I want to be able to show you guys is usually I don't have to look this far left, but in this example, I'm going to. Anytime you see that RSI, the white line dip outside the purple box, that's going to be exhaustion in that direction. So if it's dipping on the downside, that means the downside momentum is becoming weaker. If it's coming out on the upside, that means the upside momentum is becoming weaker. So I want you guys to notice how aggressively this market has been dropping. And on neither one of these moves, did you really get that strong of a retracement? This down move didn't really get a retracement. This down move didn't really get a retracement. The one thing that is guaranteed outside of losing in the market is there is always going to be an impulse move, a correction, and or retracement. We haven't really gotten a retracement yet. Okay. So just because we haven't gotten it doesn't mean it's going to happen. It just means it's not ready yet. So me noticing all these instances that I can look to the left to where the market is showing exhaustion here, right? In this area, right? In this area, right? All these areas where I have my vertical line are instances to where the market, according to the RSI, is showing exhaustion, right? It doesn't mean the market is automatically going to start moving up. That's why you don't automatically look for a buy as soon as you see the RSI dip outside the box, but it is telling you the market is weakening in that direction, okay? So what I'm taking from that information is all these are going to start making sense as to when I see this impulsive move after it creates a floor, a structure break, and then a retracement to stay within the zone, and it doesn't break this previous floor. Okay, on top of that, we get more structure breaks to the upside. Okay, so that's going to be what I'm actually paying attention to. Now, in this example, we don't honestly have divergence. So we're not going to necessarily be able to take advantage of that, but we do still have the exhaustion, which is, one of my primary confirmations as well. Now, the next thing I'm going to look for is, I want you guys to notice, even though I'm looking for a buy, the reason why I utilize this Fibonacci retracement for this sell move is going to be pretty simple. So notice from the high to the low, this was the last impulsive move to the downside before it created a floor. What I'm looking for is, yeah, this market could still technically be selling, okay? But before it sells, I feel like it needs to give us some sort of deep retracement since we have not gotten that in the previous two impulsive moves, okay? So what I'm looking for is a short-term buy to maybe take me up into this retracement zone of the 61 to the 88.6, right? So maybe something like this, okay? Before the market possibly continues to drop lower, and then maybe it does break this low and continue going. I don't know yet, but I'm not necessarily looking for a swing buying opportunity. I'm just looking for a short-term buy to be able to maybe continue the sell, but I want to be able to get advantage of the buy, even if I'm not looking for the sell, okay? So this fib area could actually be utilized as a target. Now, what we want to start looking for is our entry. So if you guys have paid attention to any of my previous videos, I always talk about my entry is going to be the same. It is going to be an engulfing and or institutional candle, okay? Now, the thing I want to be able to talk to you guys about is going to be this. I'm going to start flipping through multiple time frames until I find an engulfing and or institutional candle that I like. It's going to be the biggest candle on the biggest time frame. So if I go to the 2 hour, okay? Well, one thing I want to show you guys is let's look at the 1 hour, right? Notice we have an engulfing candle right here, but this is not the biggest one on the highest time frame because we're still on the 1 hour. So I'm then going to go to the 2. Okay, on the 2 hour, we have this candle down here, right? But we're only on the 2 hours. So let's keep going. On the 3 hour, we don't. On the 4 hour, we do. So the thing I want to be able to show you guys is going to be the fact that all right, so I had to cut the video temporarily, but we're going to go ahead and continue. So pretty much what I was explaining was we ended up finding the biggest candle on the highest time frame on the 4 hour. So if we actually look at this 4 hour candle, as you guys can see right here, let me get rid of this so we don't get too confused. So if you guys actually focus on this 4 hour candle that I've identified right here, this by definition of what I'm looking for is going to be the biggest candle on the highest time frame, okay? So what we're going to do is we're going to actually start looking for an entry, which for me is pretty straightforward. Now, the first thing I want to be able to look for when I'm looking for an entry is I want to be able to find the 50%. I want to be able to find the 50% of the candle, right? So I want to be able to find the 50% of the candle, okay? And within the 50% of this candle, I can start now looking for my entry, okay? So if I notice that the 50% of the candle is going to be right here where it literally says 50%, that's going to be the best area that we would like to see the market give us a retracement to, okay? The 50% right here. Now, what I want you guys to notice is we're not always going to get a retracement to the 50%. So I want to be able to look for possibly, a slightly more aggressive entry. The way that I find that is I'm going to take a box from the opening of the candle to the 50%. And within this zone, I'm now going to start looking for a refined entry. So that refined entry is going to happen like this. Okay. So watch this real quick, right? So we're going to have the 71%. We're going to have the 78.6. All I did was I took my fib from the low to the high. And since we're looking for a long opportunity, this fib zone is where we could be looking for an entry in total. But I simply refined it to the 50% in the opening so that we can look for a more specific, more accurate area. So the way that I look for my entry is I want to be able to utilize the fib levels within my entry zone that I've now drawn to be able to look for a possible opportunity. So for me, I want to be able to use the fib level that's closest to the opening of the candle to be able to take advantage of a buying opportunity. Okay. So what I'm going to do is I'm going to utilize the 71% because this is the closest to the opening of the candle. And ultimately, that's why you guys see that yellow line I put there represents my entry. So now what I want to show you guys is let's see how this market actually played out. So as you guys can see, okay, the market ended up giving us, right, a move of about 85 pips. Okay. And no, it did not actually reach that deep level of retracement that I was looking for in this initial move. If I let it play out, it did end up going up there. So let's see. So as you guys see, the market did actually end up going there, and it gave a very aggressive move whenever it did. This is where the market currently is right now. As you guys can see, market just opened today, but you guys can see this area that I identified as far as the zone I thought it would go to before it gave, some sort of reaction is where it went. But ultimately, it did give us 85 pips. We hit take profit, adjusted stop loss to break even, and we made our money. So with that being said, if you guys came to the video, learned something from the video, appreciate the video, let me get you guys to go ahead and hit the subscribe button, right? Because you know how I know. If you guys don't hit the subscribe button, you're not going to know whenever I'm dropping a new video, and that would be a tragedy. Now, underneath the subscribe button, you guys are going to see the like, the thumbs up, and a section to be able to leave a comment. Make sure y'all go ahead and do that because you know the motto by now. I'm going to see you guys at the top, not from the top. Why? Because the bottom is way too crowded. See you on Wanna Be Ya. Peace.